Hey everybody, Chuck Barone, Tuesday, March the 14th, 2023, one day post-apocalypse. Oh my God, bank's going under. All of a sudden, everything just kind of went away, didn't it, man? I tell you, I hate to keep using the word crazy, but I can't think of a better word to describe exactly what we're dealing with here, because it is crazy, okay? Anyway, before we get onto the show, as always, want to start by welcoming everybody to the show. Thank you guys for your support, watching the videos, asking your questions, your comments, your likes, your shares, everything you guys do for us. We really appreciate it. Markets today. Well, we saw the way the markets reacted yesterday to Silicon Valley Bank failure, and it was the end of the world. Oh my God, it looked like, every bank was all of a sudden suspect, right? Well, all that went away today. So stocks rally like crazy. The Dow up 336 points. S&P up 64. NASDAQ up 239. A miracle rally. Now, guys, let's just call this what it is. It's a bear market rally, okay? The stock market is just fighting amazing forces on both sides. You have companies doing fairly well. Their earnings are holding up for the most part. The companies are hiring. Business is decent, right? At the same time, you got inflation. You got all these different pressures, bank stuff, customers not being able to buy as much because their incomes aren't rising as fast as prices are. And the stock market, truthfully, I could see things being really way, way, way worse than they are right now, guys. So the stock market rally, take it for what it is. I think that you got to, on these rallies, guys, the idea is to take advantage of these rallies, and if you have a position, you're looking to lessen your exposure, or let's just call it normal dump. These rallies, that's what these rallies exist for. The bond market today, another wild and wacky day in the bond market. Prices falling, yields rising like crazy today. You got the 10-year up 12 basis points at 3.63%. These rates are getting whipsawed around. You don't usually see these kind of rate moves, these kind of yield moves in the bond market on a day-to-day basis like this. It's just extraordinary. The 2-year, which yesterday was down 56 basis points roughly, today rallies back up 20 or down 21 basis points. So now, no, they were up 21 basis points today, forgive me. So now you have the 2-year sitting at 4.24%. Guys, this bond was just over 5%. What was it, like last Friday? These kind of swings in the bond market are highly unusual. You don't see this stuff unless dramatic stuff is happening. There's really no certainty, so traders frantically just trading day by day. It's crazy, man. The dollar today, not a big event today. Dollar down fractionally, 103.57 on the index. Not much in the dollar today. Metals today, another down day, but a small down. Gold down $10.40, sitting at $19.04. Silver down 14 cents, $21.76 per ounce. Metals holding their own, and I'm telling you, these metals want to run, guys. I think you're going to see $2,000 silver. You're going to see $2,000 gold, $25 silver. They're just looking for a reason to rally. I think that, this dollar, where it's sitting, with a little bit of vulnerability, you could see metals really blast off. Oil today down big, man. Wow, $71.54 on West Texas Intermediate. That's down almost $4 from yesterday, $3 and change. Now it looks like we're going to have to create a new trading trough. It was 80 to 85 for a long time. Then it kind of broke out to the top and didn't hold and crashed back down. Then it kind of found a range between 75 and 80, and it looked like that was going to be the range it was staying in because it was pretty consistently staying there. Well, now breaking out to the downside, it looks like we may have a new range between $70 and $75 per barrel. We'll see if this holds. If it does, hey, America might see a little bit extra relief at the gas pumps this year, or this coming summer, at least. Maybe not big increases heading into driving season. Even that would be good, right? Bitcoin today, another nice gain today for Bitcoin, man, up $710, breaking 25,013. I guess, when you have a Bitcoin that at one point was approaching 70,000, you probably don't know if you really should be celebrating 25,000. But from what looked like could be extinction, rallying from 16,000 and change, which was the low, up to 25,000 is quite a performance, man. I got to say, bravo for Bitcoin, man. It's doing okay. News you guys need today. Well, everybody knew the news of the day. Yesterday was all about banks. Today we get CPI numbers, the Consumer Price Index, coming out today, 6% year over year on the top line. That's down from 6.4 last month. So prices, still going up, sadly. Not as fast as they were a year ago, not as fast. Well, I guess a year ago we were just starting this inflation, but CPI continuing its slow little trickle. Core prices, well, that was kind of a mixed bag today because year over year core prices fall down to 5.5 from 5.6. But month over month, rising faster than they did last month. Not good news, man. So core prices actually kind of mixed. Now listen to this. All of these things I'm about to read off here, their prices, all of these, up more than 10% year over year. Ready? Eggs, butter, airfares, fats and oils, bakery items, cookies and cakes, bread, sugar, car insurance, utilities, cereal, electricity, car maintenance and repair, pets and pet supplies, pet products, food, named mostly, household paper products, paper plates, man, outrageous, and paper napkins, and of course, rents. So all of these items, I don't know what else you could really add to this. I guess clothes that are like the essentials people have to have. When you're talking bread and butter, you're talking utilities and car maintenance. You're talking pet food, paper products, rent. And this is basically what people deal with every day of their lives. All up more than 10% year over year. So it's nice to hear the inflation numbers are 6%. But we buy eggs a lot more often than we buy big screen TVs, man. So big screen TVs coming down in price, even if it was a big drop, is not going to affect us as much as eggs going up as much as they have. So CPI, this inflation numbers, not looking good, guys. Not good at all. And this puts tremendous pressure on the Federal Reserve to stick to the plan of raising rates. Now, we all know we learned a valuable lesson yesterday on what happens to existing bonds and debt instruments when the Fed raises rates. Banks are getting crushed with this stuff. But now the Federal Reserve, to kind of dampen the fear factor, so to speak, has opened a window for lending to banks where they can use these low-interest bonds as collateral for loans. So you have a 1% bond, and you will have a depositor who wants to redeem his money, and you have to sell this bond to give him his money. You can now borrow against that bond at the Fed rather than selling it at a loss. And if you hold it to maturity, well, it's going to be worth its face value. So now we got some jockeying in these markets. It's just fascinating stuff to watch. We're seeing history, guys. We really are. People 30 years from now are going to talk about these times like we talk about the inflation days of the 80s. Us finance nerds, right? So just an amazing time to be alive. Hopefully you're following the rules we've been giving you guys. If you have, a lot of this stuff, it's fascinating to listen to. It gives you a lot to think about and a lot to be thankful for, because if you've been following our advice, almost none of this stuff is really affecting you. And that's where you want to be, right? Now, back to the show. Banks, getting back to banks. We know the Fed's opened this window to give banks an avenue to satisfy customer withdrawal requests. We know that a lot of businesses, not just banks, but look what's happening with Blackstone's real estate fund and a whole bunch of other these real estate funds that were just go, 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 now are no, 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 can't handle their withdrawals. And we know that they had to close the Silicon Valley Bank when they were faced with a wave of $42 billion in withdrawal requests in one day. I don't know how many banks could handle that. So now, banking kind of getting torqued around. Again, everybody jockeying, let's get this in order. So Moody's comes out today. Now Moody's, one of the ratings agencies, and we got to say it like it is with these guys. Moody's and S&P, they were the culprits. Big part of what went wrong in 2008 and before, the way they were rating these bonds. But now they've come out, Moody's, and they're putting 6 banks on their downgrade watch. So now if you hold accounts at these 6 banks, doesn't mean they're going out of business. It doesn't mean they're going to close. It doesn't mean they're Silicon Valley Bank. It just means they're at risk for a downgrade in their credit rating, which is typically a sign of trouble for a bank, right? So if you hear your bank's name on this list, do what you got to do to protect yourself. The 6, First Republic Bank, Zions Bank, Western Alliance, UMB Financial, Comerica, and finally, Intrust Financial. Those are the 6 that Moody has on its downgrade watch. I'm guessing there's a lot more banks right now suffering than just these 6. Amazingly, people were piling into banks today because the sector crashed so hard yesterday. People actually buying bank stocks early in the day, go bottom fishing, right? So anyway, there's an idea of what's happening in banks today. I wish I could say that, don't worry about this stuff. I really kind of would tend to believe that a complete and total banking collapse like we saw in 2008, I don't really see that coming this time around. But that doesn't mean there won't be trouble in the banking sector. That doesn't mean profits won't be sinking. That doesn't mean some banks might not blow up. Look what happened to Washington Mutual last time around. The biggest bank failure in American history, right? So be cautious with your banking, guys. I had some people chastising me in comments yesterday because I've been advising everybody to save your money, save your money, save your money. Well, do that in a responsible way. I'm not suggesting pulling all of your money out of the bank, but it wouldn't be a terrible thing to have a little bit of cash, say somewhere between $1,000 and $5,000 in cash on hand in a safe at home, having some of your gold and silver stash in a safe at home rather than in a safe deposit box, just in case. This is what you call basically an insurance policy against the worst happening. If you're a person who's lucky enough to have more than $250,000 at any banking institution, take the time to spread that money around at different institutions then. The FDI insures up to $250,000, but it's not per account, guys. Okay? So they're going to try and tell you that. I just tell you this. I would not have more than $250,000 in any single bank. Savers, people like me, piling money into CDs like you haven't seen in decades. CD rates, available rates, over 5% on a 12-month CD. Fantastic stuff, right? Listen to this, guys. CD balances, the amount of CDs bought, rose from 36.5 billion in April of 22 to 418.4 billion. Almost more than a tenfold increase, guys, by January of this year, 2023. Now, Capital One, Synchrony Bank, Forbright, these are some of the lenders, or not lenders, but banks, who are offering CD rates higher than 5%. I guess it's kind of hard with the banking turmoil right now to be thinking about buying a CD at a bank, but 5% is not a terrible return. Now, you can double your money. At 5%, you double your money like every 15 years, roughly, I think it is. Not a bad deal. 14.4 years, something like that, with no risk at all. Well, I guess, the FDIC is going to insure your CDs up to $250,000. So, not a terrible deal for somebody who's tired of the stock market, tired of the bond market now, which has just been gyrating all over the place, man. And if you're a bond buyer or a bond holder, I had a person in the comments yesterday ask the question, aren't higher rates good for bond buyers? Well, yeah, they're great if you're buying a bond right now, it's great. If you're holding bonds and have been buying bonds for the last 10 years, it's not so great because you're losing money on every existing bond. Okay, picture this, guys. Most bonds have a face value of $1,000. Okay, so you have a $1,000 bond that was issued a couple of years ago paying 1.5%. Okay? Today, that same $1,000 face value bond has a 5% or 4.5%, whatever the numbers. Significantly higher than it was just a few years ago. Well, what happens is the old bond, now to increase the yield to match the current yield, now you have to give up principal amount on the face value of your bond. Therefore, you're taking a loss, right? And that's how they balance the yields out. Not a great scenario for bond buyers, but you don't have that with CDs. So I think a lot of people who might have been buying bonds, looking at CDs right now, because the worst that can happen is CD. If you had to cash it out early, you lose the interest you're earning, but you don't lose any principal. The bond market these days, with rates on the rise like they are, highly volatile. People losing money in the bond market. It's crazy. You can be a trader again, a bond trader, like, back in Gadsby days. Anyway, guys, that's what we got for the day. CPI today, the big news is CPI. The Federal Reserve having a tremendous amount of pressure now. We'll see what happens next week. Are they going to, people now talk, I've heard everything now from raising a half, raising a quarter, standing pat. Now some analysts coming out saying a rate cut next week. I don't know if we're going to get that extreme. My prediction would be the Fed will go ahead and continue these quarter-point rate increases. They have 6% stinks. Core numbers going up stinks. We're going to see PPI tomorrow. If those numbers don't come in good, we know we're going to have continuing high inflation down the road. We'll reanalyze what the Fed might do tomorrow after we see those numbers. But as it stands today, I got to figure that quarter point's coming for sure next week. One last thing before we go today, guys. I read the comments all the time on the blog. And we got these scammers coming in now, asking you to email them, using my picture, using my name. I will never, ever, not one time, ever ask you to contact me in the comment section. Okay? You guys all have my website. You guys know how to reach me at Ask Chuck Barone. Right? So, please, guys, be very, very careful of these trolls. It's crazy because it says, I look at the comment and it says, there's somebody else that responded to the comment. I click on that and it doesn't show it. But what happened is when I was responding to some comments, it's responding to me, asking me to email it and telling that, people that it's going to link them up with a great money-making idea, probably a fast way to get separated from some of your cash. So please, guys, be very, very cautious. If you're not sure, that means don't do it, okay? Anyway, that's it for today. Special shout out today to my number one fan, old JB, Judy Morris. My mother-in-law, she watches the show all the time. She contributes. She's a super awesome woman. Just want to say, hey, JB, you rule. And that's it for today, guys. Have a great day. We'll be back tomorrow with PPI and a whole bunch of important data. We'll see what the day brings tomorrow. Until then,